Welcome back to the channel. If you want to build business credit with bad personal credit, there are certain things you have to really understand first. So first thing first, here is the overview I want you to really think about. Building business credit can take time. This is important. It's not going to happen overnight. Don't listen to people telling you you can build business credit in 30 days, in 90 days. It doesn't happen. They're just lying to your face. Very important to remember that, okay? I want you to keep your expectations at a reasonable level. So even if you never plan on taking out a loan or tapping a line of credit, it cannot hurt you to build your business credit to start at least today doing it, okay? It takes time, but it is possible. Now, you have to understand there are certain differences between your personal credit and your business credit. So basically, when we speak about FICO score, we're thinking about payment history that accounts for 35% of your score, your credit utilization that accounts for 30% of your score, your length of credit history, 15%, your credit mix, 10%, new credit, 10%. So that's for your personal credit score. Let's actually contrast that with your business credit. So business credit takes a different approach. It focuses on factors such as time in business, number of employees, public filings, and payment history. So business credit information is primarily collected by four main reporting agencies. You have Dun & Bradstreet, Equifax, Experian, and FICO. Generally, payment history carries the most weight for payment credit score calculations, but for business credit score calculations. So when we talk about personal credit, payment history accounts for only 35%. But when we speak about business credit, payment history can go for like 50 or 60%. It's very important to really understand that, because otherwise you'll be actually spending a lot of time on something that doesn't really matter. So payment history is really, really important. And business credit is not based on personal credit. No. Now, the thing I want to say here is that even though those two concepts are separate, business owners' personal credit scores can still have a big impact on business lending decisions, especially when a business is just starting out, okay? Or if you are a single member LLC, or you're a single member S corporation, for example. In other words, the business and your own persona are the same, okay? And so when we talk about, so basically if you have sort of low credit score personally, the business might ask you for a personal guarantee. So this is sort of common practice unless you're able to provide other forms of financial, or let's say, financial assets, financial guarantee, or equipment guarantee. And when we speak about a good business credit score, we are speaking about a PATRIKIOS score of 75 or higher. So the spectrum goes from 0 to 100, with 75 or more being sort of like where the sweet juice is at. So now here are the steps I want you to follow right now, boss. If you are trying to build business credit with a bad personal credit score, here are the steps you need to follow right now. Step number 1, you want to incorporate and establish your business. This is really important. See, the whole thing you have to understand here is that the credit bureaus need to know your business exists before they can create credit reports for it. And so you have to incorporate. First, you have to incorporate. So you have to incorporate your business. In other words, you form a company, or you form an LLC, a limited liability company. So this ensures your business entity will be separate from your personal identity. This is really important. You want to actually preserve your personal assets. If something were to happen, you never know here. So it's important to actually have this segregation of personal affairs versus business affairs. This is really important. So you can choose, you can become a C corporation, you can become an LLP, an LLC, depending on your state. You choose what you want. You have to follow some procedures. There are some online LLC or online company formation services such as Zendesk, Zen Business, okay, Inc. File, and whatnot, that can actually help you. So you have to file paperwork with your state government. That's number 1. Number 2, you want to get a federal employer identification number, your EIN. So this is a free service offered by the IRS and also serves to identify you as a business entity, okay? And you want to open a business checking or savings account. So make sure that you use your legal business name for any of your business banking accounts. It's very important to be consistent across the board, boss. Very important. And one thing you also want to have here is you want to register with Dun & Bradstreet. And the reason why we want to do this is because, first of all, Dun & Bradstreet is the #1 business credit reporting agencies. Okay. Number 2, you also want to get your DUNS number. It's very important to get your DUNS number, your DUNS number. This is a 9-digit number that is used to identify each physical location of your business. So it's free for all businesses required to register with the federal government for contracts or grants. Now, the government recently has changed their requirements. Now they're asking you to actually apply for any other form of ID. It's called a UID, so different from the grant. But this is another topic for another day. So bottom line is what? You want to incorporate and establish your business. Make sure that you have your EIN, you have your business checking account, your business savings account, all the kind of things that you also want to think about, your business phone number. And it doesn't really matter if you are working from home, you still need to get those. You still need an EIN even if you're working from home. I want to quickly remind those who have just caught us in our process here. Today's topic, we are talking about how to build business credit with bad personal credit. So after you're actually incorporating and establishing your business, you want to establish trade lines. What are trade lines? Let's just talk about that. See, the whole thing is important. The whole thing that you have to remember is that while a lot of information can wind up on your business credit reports, trade lines can be particularly important. So business trade lines are lines of credit established between a business and a vendor, such as an account with an office supply company, where the company allows you, the business, to pay the account balance several days or weeks after receiving the inventory. So this is what you probably heard it. It's called net 30, net 45, net 60 if you're lucky, or net 15. It really depends on the relationship you have with the office supply companies. For that matter, if you speak, this could be anything. We're just using an example of an office supply company. Okay, so vendors may report this account to any reporting agency, but they're not required to do so. That's the thing a lot of folks don't understand. See, net 30 vendors, net 45 vendors, net 60 vendors, they are not required. There's no law, there's no there's no contractual obligation that tells them, hey, listen, I want you to report my data to the CRAs, the credit reporting agencies, to Dun & Bradstreet, to Equifax, to SBFE, to Experian. No. So depending on the type of credit report, a trade line that's reported may include information such as your available credit, the amount owed, the terms of the account, recent activities, and when you pay relative to your due date. So it's really important to contact the vendor and ask them specifically if they would please report. In other words, they're doing you a favor. They are doing you a favor. So I want you to be humble here. I want you to be polite here. I want you to be courteous in asking them to report your data to the CRAs, so the business CRAs. Okay, and you could have a business credit report without a trade line, but it may be hard for you if you actually are trying to build business credit if nobody reports your data. Okay, very important. And this is because the number of trade lines that you have and your payment history may be quintessential factors in your business credit file. So please, I want you right now, when you establish a trade line, please contact the vendor, be polite, and ask them if they would please report your info to the business CRAs. But don't forget to actually register with them, though. You need to register with Dun & Bradstreet, not only for your DUNS number, but also so that they can have a file about your business, Do the same thing for Equifax and Experian. Another way, this is step number 3. So step number 1, you incorporate and establish your business. Step number 2, you establish trade lines. Step number 3, use a business credit card. This is really important. So a business credit card allows your company to establish a business credit history. It doesn't matter if you have bad personal credit. It doesn't really matter. We're speaking here, we're trying to segregate the business's affairs from your personal affairs, okay? If you are having sort of, let's say, an adversarial situation in terms of your personal credit score, it doesn't matter. You can still build a strong and rosy business credit score. So it's important, however, to pay off credit card bills on time or even early. This way, the credit card company may report good behavior to the business credit bureaus, thereby maintaining a high credit score. We are speaking about anything above 75, okay? To get approved for a business credit card, a business owner may need to undergo a personal credit check and have a personal guarantee in some cases. If a business owner does not qualify for a traditional business credit card, he or she may apply for a secured or retail card at a store the business regularly uses. One thing I want to say here is that, boss, if you are trying to build business credit and you need a business credit card, I want you to start with the bank where you are currently at. I want you to start at a bank where you currently have a relationship, not only personally, but also business-wise. Okay, when we speak about business credit cards, there is a constellation of business credit cards that you need to be aware of. So you have business credit cards that are issued by banks, your traditional banks, the national behemoths such as Wells Fargo, Citi, Chase, Bank of America, and whatnot. So you have that. You have actually business credit cards that are issued by credit unions, and you have an EIN only business credit cards that are issued by fintechs such as Brex, the Brex card, Stripe, okay, so and Divi, among others. But what I want you to really start with. You always want to start with the bank where they currently know you, because that bank already has a part of your data, either personally or business wise. They have seen your cash inflows and cash outflows, and they will be more willing to extend a line to you. And if nothing really works, please, you can go to a store and just get a store business credit card that really works. Or also you can get a gas business credit card. Those are relatively easier to get. I want to quickly remind you, boss, that today's topic, we are still having a conversation about how to build business credit with bad personal credit. And step number 4, you want to apply for a working capital loan. So the thing is, if you have a bad credit score personally, you can still apply for a working capital loan. So this type of loan can help you actually finance your day-to-day operations and cover short-term financial requirements. And remember, we are going to pay attention to making timely payments here, because doing so can help increase your business credit score. So what are the types of working capital loans? Everybody talks about working capital loans and whatnot. What are those really? So there is a diversity when we speak about the working capital loans. There is diversity of loans. So you have short-term loans. So this is business capital actually that allows you to actually get a lump sum of money that you have to repay over 3 to 18 months. So the time from here is 3 months, 3 to 18 months. Then you have a working capital lines of credit. So this gives you access to a pool of funds that you can tap into as needed. You only have to pay interest on the funds that you end up using, okay? And so a line of credit is particularly a good option for business owners who want to set up an emergency fund, because the money is there if and when you urgently need working capital. Also think about merchant cash advances, MCAs. So basically, if you have an MCA, the MCA company advances you a sum of cash, which you will pay back by allowing the company to take a fixed percentage of your daily credit card sales. So this is actually really good if you have credit card sales or debit card sales for that matter. You need to have electronic card sales to actually qualify for an MCA, a merchant cash advance. And also you want to think about invoice financing. When we speak about working capital loans, invoice financing is also really good. So small businesses often face a shortage of working capital due to late payments and unpaid invoices. Therefore, invoice financing is a solution for business owners whose working capital is tied up in outstanding invoices. We're speaking about outstanding AR, accounts receivable, okay? So invoice financing allows you to trade in your unpaid invoices, your unpaid accounts receivable for business capital, freeing up cash to use for your business's daily operations. So when we speak about some lenders, you have On Deck, you have Credibly. Those are really big players in the industry. You have Loan Builder also. What I want you to do, boss, you want to check business credit reports regularly. And when we started this conversation, I was just mentioning to you that it's very quintessential that you talk to a Net 30 vendor, that you talk to a business credit card issuer and ask them to report your data to the credit reporting agencies, to the business credit reporting agencies. The top three being Dun & Bradstreet, Experian, and Equifax. And some will also report your data to the SBFE. SBFE stands for Small Business Financial Exchange. It's very important now. One thing I want you to do here is you have to closely monitor business credit reports to ensure that your business is in good financial standing. And it's also possible that a business owner may catch errors. Let's say, you just check your business credit reports, you may actually catch errors while reviewing statements. And remember, a simple mistake can seriously damage your score. So regularly monitoring can save you a lot of hassle. And a poor business credit score can make it hard for your business to get additional funding. In fact, it can make lenders not want to work with your business because they're not sure if you will pay them back. Okay, so it's important that you actually constantly try to improve your credit score, but also monitor it. And what you want to do here is that, you want to scan your business credit reports for errors. Now, business credit reporting agencies, we're speaking about the top three, Experian, Equifax, Dun & Bradstreet. They actually gather information from a variety of sources. Your business credit reports may include your company's contact information, an overview of your business type and industry, key personnel, number of employees, years in business, subsidiaries and branches, and sales. Financial data, including your business's estimated sales, available credit, historical use of credit, payment history, credit inquiries, and collection accounts. You have a public records information such as tax liens, you have judgments, you have lawsuits, you have bankruptcies, or fraudulent activity related to your business. Okay, and the thing here is that depending on the type of report, it may also contain a business credit score, recommendations from the business credit reporting agencies for how much credit lenders should extend to your business, and predictions from the business credit reporting agencies on how likely your business is to fail. And Dun & Bradstreet does a great job at that. They really go thorough. They really go in detail about doing predictions for you. So you want to make sure the information in the report is accurate, and you want to contact the bureaus individually to report and correct errors. Next step, boss, you want to pay on time, all the time. And even better, you want to pay early. Okay, so payment history actually constitutes a quintessential element, a quintessential criterion in improving your credit score. So your payment history with vendors, lenders, and credit card issuers is an important factor in your business credit score. Okay, in fact, making on-time payments may be just as important with your business accounts as it is with your personal accounts. If you're late by just a few days, those late payments may show up in your business credit reports. Okay, with personal credit, a late payment may not be reported to the credit bureaus until you fall behind by 30 days. And so this is not the same thing for business credit scores. Things don't work that way. Things are more stringent. So paying early could be beneficial as well. With some business credit scores, such as the Paydex score provided by Dun & Bradstreet, to get higher than an 80 out of 100, you need to pay your bills early. So here is the approach I want you to really follow right now. I want you to really automate your bill payment system, boss. I don't know how you can automate that through. You can have an app on your phone, or you can use a software tool that allows you. For example, QuickBooks is very good at sending you reminders on when bills are due. And don't actually put the actual due date of the bill. You want to put 1 week before so that you have leeway, you have room, because stuff happens. What if you don't have the cash? So you always want to give yourself enough room to breathe, financially speaking. So let's say a bill is due on the 21st of the month. You want to put a reminder by the 14th, 1 week before, so you have a clear idea of when you need to pay this. And you want to do this with all bills, not just the 1 or 2 bills, not just the credit card bills. And please, don't you think that some bills are more important than others? All bills are important, especially if the vendors wants to report you to business credit reporting agencies. This could affect your score significantly. So you want to have an approach where you have a reminder and you want to plan your cash accordingly. And this leads me to money. Boss, how do you manage your money? How do you manage your business money, your business capital? Do you have a business savings account or business checking account? What about your cash inflows and cash outflows? How do you actually make sure that your business is able to survive. Are you using some personal cash, or are you just relying on loans right now? Talk to me about that. One thing I want you to do, and this will be today's, we're going to close today's conversation with this. You want to keep working on your personal credit. See, the thing is that I just explained to you that there is a dichotomy, a contradiction. I mean, not contradiction. I wouldn't use that word. There is a separation. That's the right word. There's a separation between your personal credit scores and your business credit score. Unless you are you're a single member LLC or a sole proprietorship. So even if you have a poor credit personally, you can still increase your business credit. Okay, I've done a good job, I believe, in explaining that to you in terms of getting business credit cards, business loans, working capital loans, working with net 30 and net 45 vendors. But the thing here is that as you are working on improving your business credit score, please keep working on your personal credit also. Very important. So I spoke to you about the fact that there are 5 elements that constitute your personal credit score: your payment history and your credit utilization ratio, accounting for nearly 2/3 of your FICO score or your Vantage score 3.0. Okay, so your payment history accounts for 35%. Your credit utilization ratio accounts for 30%. So you add those two, that's 65%. So this is really important. You want to think that the way you actually manage your personal finances, you can parlay that discipline, you can parlay that routine into your business finances. This is why you want to be disciplined and resilient across the board. Whether you're speaking about personal finances or business finances, you really want to constantly improve your credit scores. And please, so you want to get into a situation where you are making payments on time or early. Same procedures here, same procedure. Make payments on time or early. And you want to check your credit score, your credit reports regularly. Okay, you can visit annualcreditreport.com to check your personal credit score once a year for free. And it's important to review credit scores often to look for mistakes or errors also. And if you identify any inaccuracies, you should file a dispute with a bureau with the appropriate bureau to report that blunder as soon as possible, that error as soon as possible. And always try to keep your balances low, your credit balances low, so that you are actually reducing your credit utilization ratio. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to build business credit with bad personal credit. And so here are the steps. You want to incorporate and establish your business, establish trade lines, use a business credit card, apply for a working capital loan, check business credit reports regularly, pay on time, even better, pay early. And you want to keep working on your personal credit. Thank you so much for your attention. I really appreciate it. God bless you. I'll see you next time. But until then, remember, stay marvelous.